Welcome to Crypto Rosetta. My name is Savage, and today we're going to be having a look at Ethereum. Let's get into the price action and see what's going on. So we was talking about this potential still being alive from yesterday. So this is looking for a bullish potential here, where we look at this as an expanding diagonal to the upside as a wave one or an A wave here, looking for this potentially to be a B wave or a wave two. So as long as we hold this 1770 area, potentially we can still look to actually set another high here, potentially taking out the zone of this 2142 area. For as long as we hold this area and above this 1686, we do hold that potential. The problem is within the structure, we have to be careful that we aren't forming a bigger impulse to the downside. So what I'm looking out for with this is the possibility that we could see some extension within these waves, and then we could actually look to break down. The corrective way of counting this move would be to look at this whole move down into this as a W, this is an X, and then basically looking for another A, B, and a C to the downside. So I was looking for a ABC. It's possible we could still see something like a diagonal play out here. We're going to go over that in a second. But what we could also just have is that this is also just a WX and a Y to the downside. If that's the case, what we'd then be looking for is potentially a move down towards this 1969 area. So I've got this channel drawn on here. What I wanted to keep an eye on is if we have this as an A wave, potentially we could see something like this as a B wave coming back up into these highs here of this 1852, and then potentially looking for continuation down one more time towards this zone of the 1769. This would actually tie up quite nicely with coming into that 0.786. And we have this one-to-one of the Y wave sitting here at the 1780. So I will be keeping an eye on this. Potentially, we could actually look to come down into these areas directly, possibly with a small push to the upside here. But what we could then see is this lower target getting pushed into the one-to-one of this yellow wave here as an A B would actually be down here at the 1739. So this is also a target potentially if we look to extend down deeper here. What we'd have to be careful of is actually dropping down, lower, potentially past the 1720 could actually mean that within the structure we're starting to get some extension, and we could get some additional waves within this and look to extend down. And that would mean that possibly within the structure here, we are looking for a bigger potential of a downside move. Okay, so this is the corrective way of looking at it. We don't really want to see this 1770 break. If it does hold, potentially we could see a move up towards this one-to-one, which would bring us here towards this 2347, or alternatively a bigger move towards this 2720 if we are looking for a impulse off the back of this. So what we need to see here is basically for these areas to hold, and then we'd want to see confirmation of some five-wave structure to the upside. We'd then want to see a three-wave move coming back in, finding support above some of these key areas, and then looking to extend up into these higher ranges here. We don't have that at the moment, and we do continue to be breaking down. And for as long as we actually fail to take out some of these swing highs that we are forming, the potential is that we could just continue to look and extend down and continue to break down at this point. So this is going to be key. If we want to start to invalidate some of these potentials, we need to start getting back above these highs. So the other way we were looking at this move was that potentially we are looking at a breakdown. So we were talking about the possibility of completing into these lows here. If we wanted to count this as a 1, 2, this is a running flat here, and then having this as a fifth wave over here. If this is the case, then potentially we could still be looking to have a completed move here, in which case we would be looking for that possibility of having this as an A, this is a B, and then looking for that possibility of a C wave to the downside. If this is what's playing out, we could be looking to form a flat correction in a B wave, in which case we could start to see something like this, where this becomes A, we get this as a B wave, we get a five-wave move up as a C wave. So we'll talk about that. But it is also possible because of the length of this. If we have actually done that and we are forming a flat, what we would have to be cautious of is finding support again above these levels, and this becomes basically an A wave, a B wave, and a C wave, and we could start to see a push up towards the zone of this 1975 area to this 2068. As long as we remain below this 2068, we need to be very cautious that this move doesn't continue to break down. Even if we do get a bigger move to the upside here, something like this, as long as we actually fail to take out this 2068, break through it, and start to consolidate above this, I would still be looking out for that potential that we could continue to see some downwards, price action coming in here. Whether this just becomes an A, B, and a C, and we just get a push down lower here, potentially towards the zone of the 1722, or it becomes a bigger impulse and we get a drop down below this 1560 area. So we'd have to be cautious with this. It is still possible within the structure here that we could actually be still extending out, and we're going to go over that now. The other way we were looking at this was that potentially we had, some extension within the structure here. The problem is we were looking for a fourth and a fifth here, and this has gotten a bit too big for my liking, looking at this as as a 1-2-1-2, because now this fourth wave is really, it's disproportionate to this wave too. So I'm not really looking at it like this anymore. There is still potential of, extension, but what I would be rather looking at is something like this. So this move is basically looking at the structure from the beginning. We're looking at this as a 1-2. This whole move down is a 3. Looking at this as a fourth potentially, and then looking for that possibility of a fifth wave. So once again, we need to be careful because it is possible within here we could have this as a 1-2, another 1 and a 2 here. And for as long as we fail to take out some of these key highs, basically this could just continue to look to extend to the downside here. So we need to just be a little bit cautious of that. If this is the correct count here, where we're looking at this as a third wave completed, potentially a fourth wave completed here, what we could then see is that we're starting to break down in some kind of a diagonal pattern here as a ending diagonal with a contracting, a contracting ending diagonal. What we'd be looking for then would be the potential that this is 1, 2, we'd be looking at this potentially as a fourth wave, looking for that possibility as a third wave. This is a possible fourth wave, and then be looking for a fifth wave to the downside. So I'm actually going to come down here into the smaller time frames for this. And what we'll be looking out for is basically to see whether this becomes a ABC pattern to the upside. One to one off of our current zone would actually take us up towards this 1831, and that would also take us up into this trend line that we've got from the top here. I mean, on the 15 minutes, it is slightly different, so you could argue something like this. This could potentially then look to actually offer us resistance again if we do move up here, where this becomes an A, B, and a C, and then we'd be looking for another three-wave move to the downside. If we did see a push up towards this 1831 and facing rejection again, and then we're looking at this as a diagonal, what I'd want to see is another three-wave move to the downside. If we do get something like this, some particular areas of interest would be this 1803, which would be coming back and basically just taking this low again. Or alternatively, the deepest we'd want to come is this 1786. If this is a contracting diagonal, it's not allowed to cross the 1786. So potentially this 786 area would also be an area of interest at this 1796 zone. So it's possible within this we could have actually already had this fourth wave and it's just really short here, in which case what I'd be looking out for is the potential of a really small ABC pattern to the downside here, in which case this could then actually look to complete the structure. If that's the case and we do finish something like this where we come down one more time here, what we'd be needing to look out for is the fact that we could have a basically this move as an A wave into the bottom here. And what we'd have to be cautious of is once again the same sort of idea, really until we actually break above some of these key highs. We need to be aware that for as long as we fail to take, I'm going to drop it down into there. As long as we fail to take the 786 area, which is this higher range, just 2061, we could still look for that continuation down. So what we would want to see off the back of this, if this is completed, like I said, we'd want to see some good five-way structure to the upside, and we'd want to start finding support above these key levels again, and then looking to progress and actually take the beginning of the move out which would be up here. Let me just come back onto the hourly for this. Um, Back up here towards this 2142 area. We need to get back above those key levels for, confidence that we are looking to continue, at least taking out some of the, the interim swing levels here, taking these out, getting above some of these key zones again, and then actually looking to, move to the upside. But I'd still be cautious between this zone of this 2061 to this 1960 if we do get a move to the upside here, because that could just end up being a B wave where instead of looking at this in this position, we would basically just move our A wave down slightly, and this would then be an A. We'd possibly be looking for this as a B wave to the upside, and then continuation in an additional C wave to the downside, which could look to take us significantly lower if that's the case. What they would possibly be looking at doing is taking us down towards that zone of 1682 if we came back up into that 0.618 area. Okay, now the other possibility is that this fourth wave is still not actually completed. If that's the case, what we could be looking at here is that rather we have something like this playing out. So we were talking about the potential that within this structure we were looking at, coming down towards 1800 level as a B wave, this orange B wave here, basically looking for that possibility of a bigger A, B, and a C pattern. So if we do actually start to reverse from this zone, what we could then see is basically we could start to form five-wave structure here, where we form a bigger five-wave move, making this a bigger flat A, B, and C in this area. So if we do hold this zone here of this 1806, what we could then find is that we start to actually move up here and start to form an impulsive structure. So some key target areas that would be of interest would be primarily this one-to-one of the A wave, which would be here at this 1867. Then we do have the 1236, which would line up with the retest of the highs here, but a 1.618 would actually be here at this 1906 area. So we're going to have to be a little bit cautious with this one. Potentially we can argue that the B wave might not be complete, but I wouldn't really want to see it come much lower than this 1800 area. Um, we could argue that within this, we've got this is a W and X, and then we could still have one more drop for the C wave, which could look to take us towards this 1783. But if we do get a drop down like that, it's possible then that instead of looking at it in this way, we've just formed a diagonal, and then we could just look to reverse to the upside, and that would actually then be the start of a move to the upside and not a C wave like this. But this is what we need to be careful of if we do move up as well in the shorter term. This 1906 to this 1867 could offer us some resistance. So now we've talked about that, we need to just discuss the fact that we could just see a direct sell-off here. And this is something I'm just keeping an eye on here for. As long as we actually fail to take this high of this 1876 area, we need to be careful of the fact we could see a direct push to the downside here. We are still holding this trend line support here, sloping to the downside here, starting to squeeze a little bit, but we'll have to see whether we actually manage to break out of this zone. But if we actually fail and take a break to the downside, we need to be cautious of this 1740. If we do break down directly into this zone, this could then give us some extension here where we're going to get a fourth and a fifth. And this would actually then look to bring us down into this zone here, potentially of this 1732 to the 1718. This would then mean that we have basically a five-wave structure here, which would mean we'd have to be cautious that we don't have another one and two here, where this becomes three, we get a fourth and a fifth. If that's the case, we'd have to be a little bit careful because this could tie into that idea of having extension within these waves. And we were talking about this previously, saying, if we break down towards this zone of this 1735 area, potentially this could then mean that we have, a bigger breakdown playing out here, where instead of counting this, as a third wave here, we're looking at this potentially as another 1-2, a 1-2 here, 1-2, and then we're starting to break down for that bigger third wave. This would then mean that this would all be within a bigger third wave pattern here. We'd be looking for a fourth and a fifth to complete after all of these series of fours and fives play out. So this is what we need to be careful of. If we start to break down in a bigger way and we start to break down below this 1735 area in a direct sell-off here, it could indicate that within here, the yellow counter that we've got here is in play, where actually from over here we have another 1, 2. This would then become a 3. We'd get a 4 and a 5 down towards the 1722, then potentially retesting this fourth wave and additional pushes to the downside. If this does play out, given the current structures, 1658 to the 1619 area could be potential target ranges, but we need to just be a bit patient here. But as long as we fail to actually start taking out some of these highs here, this is the bearish scenario we need to be cautious of. Because if we form another 1, 2, we break down 3, 4, 5, then we'd have another 1, 2. This would become 3, 4, 5, and then, so on and so forth. And then this just looks to extend out to that downside. Okay, so I'm going to leave the video there. I hope you found it useful. If you did, please smash the like button. Hit that subscribe button if you haven't already. Turn on those bell notifications so you never miss a video. And leave us some feedback down below. Also in the description, you'll find a link to the Discord. Come check it out. It is free to join. Everyone, have a great day. We'll see you in the next one. Take care.